Hey, what's up, everyone? Welcome back to Trading Options Network. Let's get it right into it. First, we have our disclaimer. Everything we discuss today is solely for educational purposes only, and I am not making any trades to be recommended or to be traded upon. Do with all the information what you will, but take responsibility for your actions. Everything we discuss is not the opinion of Trading Options Network. That being said, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with Trading Options Network. All right. What do we have for us today? Well, the heat map is pretty much everything is green. There's a few in there. Looks like Schwab. I believe Schwab had their earnings today. What is it, SCHW? It is. Okay, Schwab. Yeah, they had their earnings today. They're taking a little bit of a hit, which I guess I'm not surprised because every other bank that has reported so far has definitely gone down as well, which is really interesting because, of course, the financial sector as a whole is still doing just fine. It's interesting to me that even though the banks are all dropping on their earnings, the financial sector has been seeming to want to take off. I almost actually opened up a trade in the financial sector yesterday. It didn't feel right because of all the earnings for the banks. So I held off on that. But man, oh man, this financial... apparently I have the hiccups. This financial sector just really wants to take off, it looks like. As do a lot of the sectors. But nonetheless, Schwab did have its earnings. It's going down. But, Microsoft and NVIDIA are each down a little over 1% right now. Other than that, I mean, you have Tesla, that's pretty much even. Meta's down, 0.84%. Other than that, it's almost all green. And those that are red are barely red. Pepsi, 0.01% red. Costco, 0.36%. That's a very, very light red for the most part. I guess in the semiconductor area, we do have a little bit more red than anything else, and it's the same for technology. We do have a little bit more red than anything else. But we have a lot of green today. So what's that mean for the market? Well, in my opinion, this is just a continuation of financial institutions reallocating their money. They're taking profits on the companies that did very, very well, and they're starting to put it in other companies, hoping that they can go ahead and start jumping. Was it just me? Okay, I thought I saw that too. Comcast went from up 1% to down 3%. I just got to see what the heck that looked like. Comcast is a weird one. CW, blah, blah, blah. CMCSA, yeah, there we go. Let's see if it had some... Okay, so that must have just been a weird glitch. I don't know if you guys saw it or not, but I sure did. And it literally went from up 1% to down 3% back to up 1%. But it was nothing. It was just a glitch. But that being said, again, I mean, we have a lot of green today. A lot of green today. Because of this is not one of those days I want to make a trade because most of these charts are going to be, in my opinion, you're going to see a lot of bear and bull traps. Maybe Schwab. We could argue because of what the other banks have done. SCHW. Because of what the other banks have done, we can argue that we should expect this to go back up simply due to the fact that, again, if we go to look at JP Morgan or Wells Fargo or Citi, they all went down on earnings and then have stormed back. So if we look at JPM, as you can see, down on earnings, it stormed back. Citigroup, okay, down on earnings, and it's coming right back. And then Wells Fargo, last one, down on earnings, and is storming back. So we can argue that we can expect the same for Schwab because the financial sector is absolutely killing it right now. But is that something we want to do? I mean, the technicals would say no. Pardon me. Technicals would say no. Oops. Get rid of those. There we go. Nope, I don't want to discard the change. Let me go ahead and save that. Actually, I'm going to go ahead and put on the Bollinger Bands, the 20-day. Change that one to the Bollinger Bands. Again, the reason I changed the 20 to the Bollinger Bands is because the Bollinger Bands, the midline, and the Bollinger Bands is the 20-day. We have a RSI, that's fine, CCI, ATR. Let me just go ahead and change that one to the MACD. All right, there we go. All right, so again, you could absolutely 100% make an argument for Schwab that you can go ahead and open up a bullish trade here. But again, the technicals would say no. I am not going to just open up a trade simply because I have a hunch. I look at the technicals say no, don't do it. Again, if you want to go based off of JP Morgan and Citigroup and Wells Fargo and what they have done, that's on you. By all means, go ahead and do it if that's what you feel confident doing. But again, that is not something that I'm going to do, simply due to the fact that, again, okay, let's check. I'm going to take a look at Morgan Stanley and Bank of America here as well in just a second. But I'm not going to open up a trade on one company simply because of what another company has done. But let's look at Morgan Stanley and then Bank of America. So let's see. All right, so Morgan Stanley's actually up on their earnings. Funny thing is they didn't really do anything pre-market. Okay, but as soon as the market opened, it looks like it came down a little bit, but has been raging upwards since. And then Bank of America, Bank of America. Same thing. So it's shooting up, which is interesting because obviously those two are doing the exact opposite of what the other four have done. Yeah, excuse me. But again, kind of backing up what I was just talking about with Schwab, I'm not going to make a trade on Schwab just because of what the other three companies have done. Because as you can see, Bank of America and Morgan Stanley are doing the opposite of what the others have done. So every company, when it comes to earnings, it's like a every man for himself type of situation. Every company can go up. Every company can go down. It's just simply how the market wants to react to the earnings call. Does not matter what sector they're in for the most part. Does not matter what the overall sentiment of the market is. None of that matters when it comes to earnings for the most part. Okay, a vast majority of the price action of a stock when it comes to earnings is based off of that earnings call from that company, and it makes sense. That's why we have them. If they didn't have much of an effect, they wouldn't be done the way they are. So let's go ahead and take a look at our positions. Again, I'm not going to really open up any positions today because we are going to have a lot of fake outs in either direction. Okay. I mean, Nvidia's down, 1.68%. If we look at that chart, okay. If we look at this, gosh, man. It would appear to me that there are a couple people on this account right now at the moment, but it's no big deal. We'll just go with it what we can. But if we look at this chart, this is definitely a flag pattern. I can very easily go ahead and boom, boom, and another one, boom, boom. Okay, we have a flag pattern. And obviously this is after a massive run. Okay. So we are still very bullish on Nvidia, but at the same time, if you want to go just off of recently what's happening today, you can argue that, hey, we're dropping below the 20-day moving average. This is bearish, blah, 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 blah. No, it's not. It's not bearish at all. It's probably more of a fake out, a realignment of assets, and we should expect this to actually be green in the near future. In fact, we might even open up a position on Nvidia if we can find options that we like. Of course, we are not going to go ahead and get into a position where the options premiums don't make any sense. But nonetheless, overall, this looks good still. Probably Microsoft, probably the same thing. MSFT. Yep, it's just a pullback. That's all it is. Just a nice pullback. where we should expect to load up and go for another run. Okay, same thing. And I guarantee I can come over here and I'll probably pick one. I can probably pick one that is bearish. I mean, we have looked at McDonald's as a bear. And by the way, McDonald's, if you are a platinum member, you would have gotten the notification to go ahead and close that account close that trade, because this sector is jumping today, and we might want to take a couple days off and then get back into it later when it decides to start moving back down again. I mean, the restaurant sector as a whole, the industry as a whole, has been struggling, but as you can see, it's all green today. It's all green today, and maybe they are getting a little bit of some momentum here. So we're not going to just hold our trades and allow them to lose value as that industry starts gaining a little bit of momentum. But if we go ahead and open up the chart, MCD, we can clearly see that this is still a very, very bearish chart. Okay, all it's doing is having a little bit of a bounce, and that's fine. We can have a bearish rally. In fact, that's just going to make the bear trend stronger in the long run. Now, being that we were holding bear positions and decided to do this now, it's too bad for us. You know, we're not going to win every position. Okay, so we did close this trade for a loss, but I don't care about that, because as long as we are maintaining all of our trades and we are paying attention to all of our trades, and we are being smart about our trading, we will be fine. Today we are up overall $858, and that's including the McDonald's position going down $855. So all of the other positions combined have literally doubled that loss. So again, we're fine. There's nothing wrong with that. But that being said, ALB is looking great. That was that ratio spread that we had. ALB is going down. If we look at the chart, hope I can get rid of McDonald's here. Goodbye, McDonald's. No one likes you anymore. ALB, again, is red. And I project that this one is going to continue to go in red, just simply due to the fact, especially today, especially on a day when there are a lot of, again, what it appears to be a transitioning of assets from winning stocks to losing stocks, and ALB is still struggling to do anything today. That's extremely bearish. So I really like this position right now. I think it's going to really pay off here. Royal Caribbean is absolutely crushing it today. Again, obviously, I expected it to be bullish, hence why we opened up the bullish trade. But man, it is actually outperforming what I was expecting. I was expecting it to be, slightly green to, possibly even neutral. But no, it's up over 2% today. This is actually exciting because I was taking a look at premiums, and I was debating on rolling the short leg. And ultimately, that is probably what we're going to do, unless this does have a big pullback in the next couple of days. But if it stays up in this area or continues to move up, hopefully not too much, but if it does stay in this area, I just want to pull up the options premiums for RCL, for Royal Caribbean. So right now our short leg is the 170 call. Here is the premium. We'll call it, roughly speaking, about $1.77. I mean, 277 to 278, right in that area. If we look at the midpoint. But let's look at next week. Next week is $5.50. Okay, we'll call it 550. Why is that important? Well, if we roll it, we are going to essentially get this additional premium as a credit, okay, minus this. So essentially what we're doing is we are going to be giving ourselves almost $3 of additional credit per spread. We have 8 spreads right now, so that'd be an additional $2,400. Now, obviously, if the stock were to continue moving up, it's not going to expire worthless. But if it were to stay in this, relatively close position, it will go down, about $4 each. So that's $3,200 on 8 positions. That's an additional $3,200 in value that those premiums, those strike prices, those contracts will lose if we just go flat for the, I mean, obviously it's going to be difficult to do. It probably wouldn't happen. But from now until the following Friday, not this coming Friday, but the following Friday, if we finish around this level, we should expect an additional $3,200 in premium, just solely based on those short legs. Now, yes, the longer legs would obviously decrease in value as well, but I guarantee it's not going to be $3,200 decrease. It'll be substantially less, so we'll still be quite positive. But the reason I haven't done it yet is because at $1, our 171.56, with our premiums for the short legs being at right now about $260, we still have over $1 premium that it can go down. It can decrease by from now until Friday. Again, that's of course assuming we don't go up much more. And if we go down, that's only going to help out this premium as well. Okay. And believe it or not, if we go down, this is going to lose more value than this. So we literally are in a perfect position right now with RCL that if it actually, even though we're bullish, we don't want it to go up much more. We don't. Okay. We'd love for it to hang around in this area, but we can literally afford for it to go sideways or down to about 170 and still kick butt on our account. That's why I love diagonal trading, diagonal spreads so much. Trading diagonal spreads, because if it does in fact go up to your price target, you have so many different options. You can hold it till the short leg expires. You can roll it. You can close it all together for you. I mean, I could literally close it right now, and we'd be up, a little over $700. Okay, do I want to do that? No. I mean, that's a small gain in the grand scheme of things, and I think we can do a lot better than what we're doing. Sorry, it's coffee sip break time. But overall, we're in a great spot because we're not guaranteed anything. The company can come out and say, oh, we're filing for bankruptcy tomorrow, and then boom, we lose everything. I don't think that's going to happen. But bottom line is we could absolutely 100% almost guarantee that we will end this trade green. Okay? So that's great. Great spot for RCL. COHR, still kicking butt. Okay. It was really, really sexy earlier when it was just wanting to go, but almost hit $81 per share. But nonetheless, oops, wrong one. We are still doing really well. And we're up another $284. And we still have 31 more days. I mean, we will literally just ride this up. It's we have a $70 call. It's at $79, so almost 80 now. And the mark right now is 1190, so it could literally go flat for the next 31 days, next month, and we would still be slightly in the green. Okay, so we are super happy where we're at on Coherent Corporation, and as long as it continues to go up until it shows that it wants to start doing a decent pullback, then we're golden. These lines that we drew are still there, and as you can see, we are still fine. And this one, I would honestly, this line here at about $78, I would actually look at this more of support at this point as opposed to resistance. But nonetheless, it's looking great. This trade is looking very good. Happy it just crossed $80 now, so we're looking great. Love it. And then finally, SOXX. I debated closing this one earlier, but we still have 3.5 trading days. We just want it to finish over 260. And it's like right at that point. It's right on that upper leg. Now, being that this is a bull put spread, that means we actually sold the 250s and bought the 260s, okay? As opposed to the other way around. But nonetheless, we want this to stay over 260. And as it continues to move below 260, if it were to move below 260, then we are no longer at max gain. So it's right at that point where it's like, do we close it in case it does decide to pull back? I just don't see that happening. I think the semiconductor industry is going to be just fine for the rest of this week. I know, again, NVIDIA is having a little bit of a pullback today, but, it's probably just going to be a one-day thing. And I would imagine that the rest of the week, NVIDIA is going to be just fine. Even if NVIDIA is flat, along with a lot of the other semiconductor stocks, then we'll be fine. And the reason I didn't close it still is we look at the legs here. We still have 40 cents on those 250s, but the 260 put, which is the ones we are short, man, the ones we are short, and I said it backwards earlier now that I think about it. We bought the 250s and sold the 260s. But the ones we are short are still worth $3. They're still worth $3 times 4. That's $1,200. Okay, so we can actually increase our gain on this position by an additional $1,200, so long as the stock finishes at least close to the 260 level. Okay, and again, we're right there at the cusp, but it's still a strong ETF. Okay, it's still bullish. I don't feel like we have any need to close it yet. I just don't. So we'll continue to monitor this one. Now, if it goes down to, say, 255, which unfortunately can easily do. I mean, if we look at the 20-day moving average, the 20-day moving average is at 253.49. So we can very easily argue that, this could have a pullback down to that level, in which case, yeah, we're going to lose our gains, which kind of sucks. Being that this is the last week that this position is open. But again, sometimes you're not going to have it easy. Nothing in this industry is ever going to be easy. So we just kind of have to roll with the punches here and, just continue to monitor it throughout the week. And if it does start pulling back hard, then we'll close the position, hopefully still for a gain, albeit it'll be a smaller gain. But obviously, best case scenario is today or tomorrow it runs up and it gives us some breathing room. So we're good there. I'm not even going to bother with any screening right now because, again, if we look at everything here, at the top, the Dow is down, is doing a pullback. The NASDAQ is having a pullback. The S&P is having a pullback. Actually, I'm sorry, these are all the day charts. Let's go ahead and let's go ahead and look at this really quick. So let's go ahead, boom, maximize sell. All right. So I always forget every single time we switch a chart. I got to re-click on the little finger there. So not a lot of movement today in the market, at least on the S&P. Okay, it gapped up again, shocker, but it hasn't done much. Okay, in fact, we even failed. This is the first time in how many days we failed to set a new high. What was that? July 1st. So this is July 16th. July 16th. And as of right now, this is the first day we failed to make a new all-time high in July. So we look at July 1st. The high was 54.79, then 55.09, 55.39, 55.70, 55.83, 55.90, 56.35, 56.42, 56.55, 56.66, and then finally a high of, what is today's? 56.63. So if it were to close today, July 16th is the first day in July that the S&P fails to make a new high. That's ridiculous. I mean, that's so stupidly bullish, it doesn't even make sense. But nonetheless, S&P is looking okay. The Qs is a little bit of a different story. You can for sure 100% absolutely argue that this is a pendant that is forming, or a flag, or a triangle. A lot of different things you can argue is going on right now, but nonetheless, this is still very, very bullish. Dow Jones is absolutely kicking butt. The NASDAQ Composite, again, you can argue it's a triangle, a pennant. You can argue it a lot. It's a lot of things, but nonetheless, still very bullish. The Russell 2000, that's insane. Okay, the small caps have been absolutely just kicking major butt lately. Bottom line, everything is looking good. Even the VIX, I mean, this is interesting too. This is actually quite interesting. We're seeming to have a little bit of a jump in the volatility index. But again, I could easily make a trend line here and a trend line here, and we can argue that we should come back down here, which is actually bullish for the market. So we have all this bullishness in the market. I really want, I feel like I should just be going all out bullish right now, but I just, it's almost too hard to trust the market, what the market is saying right now. It's so weird. It's so weird. Like, anybody that argues to me that, hey, we're overextended, we need to pull back, I get it. I 100% understand. And truth be told, I absolutely 100% agree. And if you've listened to any of my other trainings before, you know that I feel that it's coming. So the question is when. Right now, the charts do not say anything about a pullback, so we have to continue to remain bullish. And as long as we continue to see some decent trades coming, we'll open them. There's no doubt about that. But right now, I like the trades that we're in, and we're going to continue to hold them. And yeah, after today or throughout the day, I'll continue to screen, and I'll probably add a bunch more to the bear and bull list. Okay, the bear list, we're down to MP here, which is down a little bit. Had a little bit of that fake out, looks like. We were actually talking about it right here. We were talking about, is this going to be a bull trap, or is it going to continue to push higher? And it pushed higher and went over the 50, and now it's wanting to pull back. So maybe this one had more of a better run there, a better rally than most pullbacks. I'm actually going to take this one off the list though, because that's a strong rally, and a lot of things that were probably previously resistance are now probably going to be acting as support. So there's no point of having that on there. So I'm getting rid of that. So, I mean, this is crazy. We go ahead and look at the bull watch list. Apple still looks sexy. We probably could have opened up a position on that last pullback that we had late last week. But nonetheless, it's just, for me, I would rather see a larger pullback, at least down to the 20 or close to it. Airbnb, okay, we discussed this one as well, how that could be a bear trap. And sure enough, it dropped below. But the 20-day did just recently move over the 50-day. So is this one going to continue to move higher? I don't like it overall now. So we can get rid of that one for now. I'm not saying it's a bad chart. It's probably a good opportunity, but it's just not something that I personally like. Adobe's looking great. Not going to lie. Adobe looks really good. It had its little pullback and is starting to move up. But again, I think with today's reallocation of assets, again, I really believe that a lot of financial institutions are probably doing a lot of that today. It doesn't seem like it wants to push much higher. So we'll give this one another day or two and possibly get into another position with it later. Or I shouldn't say another position, but a position with it later. Applied Materials. There's another one. I like this one. It went down. It flirted with that 20, bounced off of it nicely, as we can see here. This looks nice. This actually looks very nice. I don't want to get into anything today because it has been being pulled back a little bit. And as of right now, it looks like it's actually, well, we know it is. It says it right there. It's down almost 1/3% overall. But I really like it. Obviously, it went down and it's bouncing back. In fact, let's go ahead and look at the intraday chart. Yeah. So it's looking pretty strong for the day as well. I mean, obviously it started off very weak, but it's been going up pretty much since. You know, we'll look at this one at the 2 o'clock call. Because if we can get close to breaking even on the day, then this one might actually be a position we will open today. Not going to do it yet. Not going to do it yet. Simply due to the fact that, again, let's go ahead and reset this. I don't know why it does this. It's the most annoying thing ever. Oops, I can just hit reset. I don't need to actually go ahead and change that. Gosh. Oh, it's under style. That's why. Style. There we go. Reset. Thank you. All right. I do actually like this one a lot. I would not be surprised if we open up a position before the end of the day here. It's looking great. It could very easily go to new all-time highs in the near future. And as of right now, we're at 244. That's almost a $10 jump. Or I mean, it's more than a $10 jump to all-time highs. Almost a $12 jump, actually. So I like this one a lot. Like I said, we'll probably open up a position in this one. It just kind of depends on what happens the rest of today. If it gets back to even on the day, then great. But if it starts falling apart and goes and retests that 20, then we'll probably wait a couple more days to see if we can find a better entry point. And then finally, Colgate was one of our other bulls. Almost the exact same situation as Applied Materials. It's flirting with that 20. Although the intraday is a little bit of a opposite story. It actually went up and came back down. So I'm not, excuse me. I'm not liking this one quite as much as Applied Materials. But again, if we look at this one at 2 o'clock and it's back to green and towards the top of that wick, then yeah, this is looking absolutely sexy. So we definitely have some options. But I'm going to go ahead and cut you off here. Let's keep making some money together. We're doing just fine today. And yeah, I look forward to talking to you guys at 2 o'clock. And hopefully we can find some